Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel and Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. Now I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And when I talk about setups, I will be talking about an underlying asset, and those setups can be taken with futures, shares of stock, or options. Questions and comments are welcome, and I will be watching both the chat in Bookmap Discord, Options-Doug chat channel, as well as the chat in YouTube. So please feel free to post your questions and comments. Hello, Karma FX. Glad you're here. Welcome. My agenda for today, what I want to talk about, first of all, I'll go over economic data, events, and earnings for the week. Then I'll go over my positional analysis. Then I'll review a few setups from this morning. Also, I want to wrap up, there was quite a bit of a discussion about call walls last Friday. I want to wrap up that discussion with a couple of points, and then I'll go through the live market. So when we get to the live market, if anyone has any stocks that they want me to take a look at, please let me know, and I'll be glad to do that. All right, so let's get started. First of all, news items for the week. Tomorrow, retail sales come out at 8:30 a.m. Eastern Time, and I'm just going to highlight the high impact events. So retail sales tomorrow at 8:30 a.m. Eastern Time, and then tomorrow the tech stocks that I follow start to report earnings, with Tesla and Netflix reporting after the close. So that is tomorrow. Then Thursday, jobless claims, and then Friday is the big July monthly options expiration. And just to point out, the expiration on Friday is a call dominated expiration. So I'm going to show this chart right here. This is the expiration concentration for SPX, and this is showing delta notional at the various expirations. This is the July expiration, showing call delta with the orange bars above the zero line and put delta below the zero line. So you can clearly see this is call dominated. So there's a lot of call delta, call gamma that will come off on Friday, and that should release some of this call gamma that has been dominating, or really dominating and supporting the market. That will come off on Friday, and pretty typical of a call dominated expiration, there is some weakness typically after expiration. So look for that. So that is SPX. And note this is the 7/21 expiration. Let's just take a look at SPY. And note that the quarterly expirations for SPX are larger. So there's the September and December. So that's for SPX. Take a look at SPY. And for SPY, a different story. This is the largest expiration shown in this range. Again, very call dominated. And there's QQQ. And pretty much matching the September expiration and exceeding the December. All right, so a call dominated expiration coming up. A lot of the call gamma that has been supporting the market should come off, and that could lead to a little bit of weakness after a call dominated expiration. All right, so that is the Friday expiration. Now just a brief discussion of the call walls. There were some questions about call walls on Friday. So first of all, Spotgamma's statistics for the S&P 500 show after a call wall breach, there is a high likelihood of, or typical, the average is negative forward 1 day and 5 day returns. So that's what their stat shows. That doesn't mean that's going to happen this time. That is just for the S&P 500. So note on Friday, SPY and QQQ both closed slightly below their call walls. So price mean reverted back to those call walls at the close on Friday. And for SPX, closed just slightly above the 4,500 call wall at about 45.05. So all three of these index products really kind of mean reverted back to the call wall at the close on Friday. All right, now we'll talk about shifts and levels in a few minutes, but just note that for SPX and QQQ, the call walls did shift higher, moving that potential ceiling for price up. So we'll talk more about that in just a minute. All right, so I hope that, so that's for index products. And then finally, for equities, for single stocks, Apple, Tesla, NVIDIA, the key to looking for a reaction at a call wall is really watching HERO, watching options flow. So if a price is approaching a call wall from below and traders start taking negative delta options positions, then you can expect that call wall to act as resistance. And then on the other hand, if traders continue to buy calls, that call wall, as price breaches that, can act as an accelerant. And I talked about that mechanism on Friday. All right, so that is the, hopefully that'll wrap up the discussion about call walls. So now let's take a look, start with positional analysis. This is the S&P 500 in Bookmap ES Futures. And before I take a closer look at this chart, I want to take a look at a larger time frame. This is the S&P 500 SPX index. And note that price continues to trend higher. And this trend started last week around the 4,400 level. And let me point out some levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. So far, SPX trading inside that range. And then the dashed blue lines are showing the lower and upper daily expected move. And there's a question in YouTube, where do I need to read about call wall? So go to the Spotgamma website, spotgamma.com, go to the free resources. Spotgamma has an extensive support center that is free, whether you subscribe to Spotgamma or not. Go to the free resources of the support center and just do a search for call wall, and you should find plenty of information there. So hope that helps. All right, so those are the lower and upper weekly and daily expected moves, and so far SPX is trading within or inside both of those ranges. Let me point out some Spotgamma levels now. So the first is the put wall, and note this level did move down pretty significantly from 4,200 on Friday to 4,000 today. So it was not in range on Friday at 4,200. Definitely not in range today. So anyway, that is the put wall. That is Spotgamma's proprietary level. That is the strike with the largest net negative gamma that can be expected to act as support. The next level up is the volatility trigger at 4470. That is Spotgamma's proprietary gamma flip level. Below that level, market maker's position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. That's at 4470. So that level did move up from Friday from 44.45 up to 44.70. The next level is 4,500. That is the absolute gamma strike. That's the strike with the largest absolute gamma. And that level did not change from Friday. And then finally, most significantly, the call wall is now up at 4,600. And that is the strike with the largest net positive gamma, and that can be expected to act as resistance. And that, by shifting up from 4,500 on Friday to 4,600, that raises the potential ceiling for price. So the price range now is looking up past 4,500 up to 4,600. So that is bullish. So a significant shift in the call wall for SPX, shift higher, a bullish shift. All right, so those are the levels. This is a 30-day 1-hour chart, in case I didn't say that before. Let's take a look at a shorter term chart, just showing price and levels for SPX. So this is a 1-day chart. And I just want to point out the range of levels, and notice the very narrow price range today. Price trading above the 4,500 level, also above the volatility trigger. There's the 4,500 level, and then here's the call wall up at 4,600. All right, so that is SPX for today, in a slight uptrend, but trading in a very narrow range. And that is what it was expected today. That's what Spotgamma called for, and that makes sense in a positive gamma environment, low volatility, positive gamma environment. All right, so this is the Bookmap chart now. So in Bookmap, I have my cloud notes here, and I'm showing, I'm on Nasdaq, sorry. Let me go to ES. My bad. Let's go back to ES. All right, so I'm showing for the S&P 500, got my cloud notes here. So first of all, I have the SPX levels, and it looks like that is just right around the SPY 451 level. We can check that in a minute. There are actually two lines right here. And so this 4523, that's a combo level. Combo 3 in the range of 1 to 5, 1 being the most important. So that is an SPX SPY combo level. And then I'm also showing key SPY levels. There's the 449, SPY 449, and then the SPY 450. And that is the absolute gamma strike and call wall. And note for SPY, there were no shifts higher in levels. So the volatility trigger, call wall, and absolute gamma strike all remained at the same level. 450 is the absolute gamma strike on the call wall. So right now, the S&P 500 is trading above the SPY call wall and below the SPX call wall. So that level was in play earlier today, acting as resistance. And then now this 45.15, that is SPX 45.15, acted as support. And now price is heading up towards the 45.23 level, as well as the SPY 451 level. All right, D&T Matter says, my weekly upper and lower is different than yours, and I will, let me just show you something, what I use. Let's go to SPX. So you're looking at SPX, all right, so we'll look at SPX. And you know, your number is perfectly valid. I just have something that's a little bit more convenient, and that is this script in Thinkorswim. And I got this from someone else, so this is not mine to give away, but this is what I'm using. So this, every week, this is from last week, showing the lower and upper weekly expected move. And I just lay my lines on top of that every week. So this purple line is just overlaying the lower and upper weekly expected move for the week that comes from this script that I got from somebody else. So this is not mine to share, but you know what you're showing, D&T Matter, is perfectly valid. All right, so this is the levels in play for today for the S&P 500. Narrow trading range, uptrend. So this is pretty much in line with my thesis, which was looking for lower volatility, more of a again lower volatility, smaller movement, but bullish. All right, so for the S&P 500 again. Significant shifts in levels higher for SPX, for the volatility trigger and the call wall, and the put wall shifted lower for both SPX and SPY. All right, let's take a look at Nasdaq. And RD Champion says, hello. You said SPX call wall shifted to 4,600. I can't see that even with Spotgamma Pro. I suggest you contact Spotgamma support. I'm not sure what the issue might be. I believe the levels are available to all subscription levels. So just contact Spotgamma support for help with that. All right, so here's Nasdaq. Let's take a look at. First of all, I want to take a look at a QQQ chart to see the QQQ levels in play for today. Let me grab that. All right, so pretty narrow trading range today. Slow grind up, just like the S&P 500. These are the levels in play. So the call wall for QQQ did move up to 385. So extending the ceiling, moving the ceiling up for price range for QQQ, just like SPX from 380 to 385. Round numbers have been in play. 381 resistance this morning. And now price is above. One thing, there is a little bit of a discrepancy between this combo level here and the levels that I got from another place. So this is in a script that Spotgamma provides to their subscribers. And what I'm going to show is the support level right here. So let's go to take a look at a QQQ chart. So here's that level. I've got marked here, and this was from Spotgamma, the index levels, and that was the pretty much the low of the day, the support at that level. And when we talk about setups, I'll show a nice divergent setup with a reversal long at that level. All right, so let's go back to the Nasdaq chart. And for the Nasdaq, I have my cloud notes as well. So I'm showing the big round numbers for NQ, the zeros and the 50s. Also the QQQ levels and also NDX QQQ combo levels. So that's what those two white lines are right there. All right, so again for Nasdaq, QQQ, the volatility trigger did shift higher from 369 to 374, and then again, most significantly, the call wall shifted higher from 380 to 385. Let me just point out, see if I can answer a couple of questions here. So first of all, here's where that QQQ level came from. That 379.52. All right, and RD Champion, here's you should have access to this part of the dashboard, even if with a standard pro or alpha subscription, and this is showing the call wall here. So if you are having problems, maybe you can refresh your browser or again contact Spotgamma support. All right, so I've talked about the levels that are in play for today, the shifts in levels for the Nasdaq and S&P 500. Let's take a look at some other data real quick here. Oops. What I want to point out first is gamma notional. This is for SPX, SPY, NDX, and QQQ. Note that gamma notional is positive for all products, SPX, SPY, NDX, and QQQ. And again, this means market maker's position on the gamma curve is positive. market makers have to trade against price to hedge their delta exposure. This is what leads to a thesis for a lower volatility day. Note these numbers did shift lower. They all shifted, actually not for NDX, but for, which I really don't pay much attention to for this number. So for SPX and SPY, gamma notional did shift lower slightly, and then for, as well for QQQ, but all still positive. All right, let's take a look at the Vana model. We'll go to SPX. So this will help us understand how market makers were positioned on the gamma curve and at the beginning of the day, and how they may have to hedge or trade as price and implied volatility changes during the day. So again, this is the Vana model. What this chart is showing is market makers delta notional shown on the vertical axis, and how that changes with price shown on the horizontal axis. There are a couple lines on this chart. The first light gray line is showing how market makers delta notional changes with changes in price only. What this is showing is if price increases, market makers will need to sell futures to hedge their delta exposure. Remember, they want to remain delta neutral, and this assumes that at the beginning of the day, market makers' position was delta neutral. So as price increases, they will have to sell futures to hedge their delta exposure. And then this purple line adds implied volatility to the equation. So that is showing how market makers delta notional changes with changes in price and implied volatility. And that is the Vana effect, the change in delta with the change in implied volatility. And what this chart is showing is if price decreases, market makers will have significantly more delta notional to hedge as price drops and implied volatility increases. And on the right side of this curve, that's typical of a positive gamma environment, and on the left side, typical of a negative gamma environment. All right, let's take a look and see where SPX is trading right now. I've got SPX at 45.21. Oops. So that's right around the bottom of the curve here. So this is not showing a significant headwind or tailwind in this price range. All right, so that's the Vana model, and we know again gamma notional is positive for SPX, SPY, NDX, and QQQ. All right, so based on this, and I mentioned this earlier, so my thesis for the day was first of all looking for lower volatility, and also bullish for both the S&P 500 and Nasdaq based on the shifts higher in the call walls for SPX and QQQ. All right, let's take a look at some setups. So first of all, I want to take a look at the hero signal. This is for the S&P 500. What this chart is showing is price with the white line for SPX, and then the hero signal. And I see a question in Discord. Slotazari asked, do you think SPY call wall will shift up to 460 because SPX shifted up? That's definitely a possibility. I would have to do a little bit more research before I answer that question right now. So after the webinar, I'll try to do a little bit of research, or the best thing is just to just wait for the information to come out tomorrow, and then that's how I treat this day to day. I'm looking at how levels change from day to day, and that information really comes out. It's based on gamma weighted open interest, so the information, the definitive information, the call wall won't be available until tomorrow. But it's a definite possibility. All right, so for today, we're looking at the hero signal. The white line is the SPX price. The purple line is the hero signal for a combined SPX, SPY, XSP, and ES futures. So combining all those instruments, the options trades those instruments into one signal for the S&P 500. And this is what I use for trading the S&P 500. And note this number is just mildly positive. This is delta notional value, positive, whoops. All right, let's start again. All right, so let's, we'll take a look at some setups. So first of all, let's zoom in on this chart. There were, first of all, there are really better setups in the Nasdaq and single stocks. I generally don't like to trade the S&P 500 in this lower volatility, positive gamma environment. So what I'm looking at is this really more of a confirmation setup right around 950. Hero starts rising, traders taking positive delta positions, and price moving higher really just about the same time. Now price continues to consolidate and move higher, even with the hero signal moving lower, and really starts to move higher as hero starts to move higher. All right, let's go take a look at Bookmap at the S&P 500. Go back to ES. All right, so Truman asked, where's the volatility price on the x-axis of the Vana curve? And really, well, we can take a look at that. So the split, I guess the technical split between negative and positive gamma should be at the 0 gamma line. So we'll go back and take a look at that in a minute. So here we go. Slow grind up. And looking at hero, here's that reversal higher right around 950. A little bit of a shift in order flow, a lot of aggressive buyers coming in. And a few iceberg orders, buy iceberg orders, shown by the blue number there. And then price continues to grind higher. First finding resistance at the SPY 450 level. Then support at the SPX 4515 level, noted as support in the AM Founders Note. And note the move higher is being supported by buy stop orders. So buy stop orders shown by the rising yellow line. Also these green dots here, these are buy stop orders helping to fuel the move higher. And note the stop number is positive here. So buy stop orders helping to fuel the move higher. All right, so that's the S&P 500, slow grind higher. Let's take a look at Nasdaq. So Nasdaq, remember we looked at this level on QQQ as a reversal level, right around 379.50, combo 2 level, combining QQQ and NDX gamma. Let's go back to Nasdaq. So that's right around here, right at VWAP for Nasdaq. And this slow grind higher being supported by buy stop orders as well, shown by the rising yellow line, and also cumulative volume delta rising, CVD. Both of these numbers are positive. Let's take a look at Hero for Nasdaq. So just like the S&P 500, this is a combined signal for NDX and QQQ. And this is what you want to look at for Nasdaq. I'm going to zoom in. So we know there was a potential QQQ support level right around 379.50. And this was a nice divergent setup here. And this is something that I really like to look for. So note the purple line starts to rise as price is consolidating around that level, and then starts to rise a little 10, somewhere between 10 and 15 minutes later. So very nice divergent setup there in Nasdaq. Let's go back, take a look at Bookmap again. So that happens, let's say around 9:50, 9:55. Right around here at VWAP for NQ. And Super Newbie asks, are buy stop orders above current price real buyers entering the market or shorts leaving the market? Most likely shorts covering. But the only thing, as far as I know, the only thing that we know is they are definitively stop orders. All right, so we know again reversal at that 379.52 level on QQQ support level, as well as the VWAP that is shown by the blue line there. That is VWAP for NQ. And price continues to grind higher up toward, and it's maybe hard to see, but that light blue line is the upper daily expected move. All right, so that's Nasdaq. We'll take a look at a few other setups. Then I'll take a look at Truman's question, and then we can go take a look at the live market. So first of all, let me just go through these pretty quickly. AMD. Note the 113 hedge wall acted as support, and it took a while for price to get going, but options traders started taking positive delta positions and price started to move. Let's just zoom in on this. Price moves up, consolidates, and then starts to move higher as traders started taking positive delta positions. Let's go take a look at Bookmap. There's AMD. Support at the 113 hedge wall level. And note the absorption at that level. Shown by the light blue square there. So nice reversal higher in AMD, just around 10 o'clock. Right, the next, Amazon. And I'm just going through some examples from this morning. And this was really the only notable thing about this was the, I believe this is the 135 call wall key gamma strike and the reversal lower at that level. Right, the next, and traders were selling calls. We'll take a look at that in Hero real quick. Let's go to Amazon, separate out puts and calls. So the falling orange line shows that traders were they were selling calls. That's negative delta, they're selling calls. All right, so that's Amazon. And then the next. And this is a pretty interesting setup in Meta. Notice the gradually increasing hero line. So traders are taking positive delta positions, and we'll see in just a minute they were selling puts. And price was finding support just around the 305 level, and it took a while. This is a very long divergence for a stock, single stock, but finally price takes off higher. You can separate out puts and calls. And you see that traders were, and this becomes more clear. This rising blue line shows that traders were selling puts, and that was helping to finally drive price higher. And they weren't doing much with calls. Note the orange line overall is pretty flat, and then they start to buy calls, continue selling puts, and price continues to move higher. All right, let's go take a look at Bookmap. So there's the support and consolidation at the 305 level, and price starts to move higher as traders continue to sell puts and start buying calls. Good for a move up to the 310 level so far. All right, the next is NVIDIA. Let's take a look at Hero. So mixed picture here for NVIDIA. And what I want to focus on is somewhat of a divergence long in the morning. So note Hero starts to rise, price continues a few minutes later, or starts moving higher a few minutes later. Not as easy to read as some of the other setups. We'll zoom out. So overall, though, there's a very strong correlation between options trades, hedging flow, and price action in NVIDIA. Let's go to Bookmap. So here's the long setup. And then finally, let's take a look at Tesla. And go to Hero. And here's a little bit easier to see here, this nice divergent setup in Tesla. So just around 10:10, traders start taking positive delta positions, and then price continues lower. Let's just, oops. So notice that Hero is making somewhat equal highs and equal lows up until about 10:10, makes one final test lower, starts to move higher as traders start taking positive delta positions. Price continues lower and then reverses higher right about 11 o'clock. So this took a while to play out, but a nice divergence long for Tesla. Let's go to Bookmap. So here's the reversal higher with this final sell sweep into 284. Shown there, and price reverses higher. All right, let's take a look at a couple things. Let me get to some questions. So first of all, Truman's question about the location of the volatility trigger. So let me see if I can. All right, so it's a little bit easier to see on this combo strikes chart. So we know that the volatility trigger is at 44.70. So that's right around here where I'm holding my cursor. So note, and I'll point to that line. Right around here is the volatility trigger. Let me just check and make sure I've got that. All right, so it's right around there again. So note, above that level is mostly positive gamma shown above the zero line, mostly negative gamma below that line. All right, so Truman, this is where if I want to see a visual representation of that volatility trigger, that's where I look. All right, and then Karma FX wants me to take a look at AI stock. So let's go to Hero. And I assume you mean C3 AI. So there it is. Bullish for most of the day. Traders are buying calls. All right, so Truman, I'm not sure I understand your question. I guess I really don't question, or I don't have time in the morning to dig into exactly where the volatility trigger is and how that fits into the various charts. I just take I take Spotgamma at their word that 4470 is the volatility trigger level, and that's pretty much the extent of my investigation. All right, so there you go, Karma FX. All right, I'm getting a lot of questions on YouTube. So let me tell you, Captain Price, if you don't have a question for me, your comments are not really helpful. So I'm trying to read these questions. All right, so John 412 says NVIDIA has been trading above the call wall at 450 yesterday and today. Today, the 450 calls and puts are trading with the most volume, yet NVIDIA is currently trading at 460. So let's go back to NVIDIA. It just depends on what traders are doing today, really. And there's a potential that NVIDIA could revert back to the 450 level. So, John, I'm pretty much just day trading stocks, and I'm looking for setups like I showed this morning in NVIDIA. Let's see. Let me open up something else. We'll take a look at NVIDIA in here in Equity Hub to get a clue of what might happen. All right, so first of all, here's how I would look at NVIDIA. The key gamma strike has remained at 450 for the last 3 days. Now it did increase for the last 5 days, has increased from 420 to 430, now at 450. The call wall remains at 450, has not shifted higher. Note that I'm looking at this next expiry gamma percent. That's pretty high, 39%. So 39% of gamma will be coming off on Friday, the Friday expiration shown there, 721. So that's a pretty significant number. Let's take a look at one other chart in here. I'm going to take a look at the put and call impact. Let's zoom in on this chart. So there's the 450 level, and as John noted, NVIDIA is trading up above this range. Those calls are in the money. There are also other calls, and these calls, we know that right now, and this will probably increase toward the end of the week, that there's a lot of call gamma expiring at the end of the week. So when traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. As expiration approaches, those calls will start to lose value. That is the charm effect, the change in delta as time passes. A large amount of gamma is expiring on Friday, so I would look for what I call a call gamma unwind. This is potential for Friday. If traders don't continue to buy calls aggressively, these calls, all these calls at 450 and above, they're going to start to lose value. They're going to lose all their extrinsic value, and of course anything above the current price is all extrinsic value. So look for a potential call gamma unwind at or after Friday expiration. All right, let me scroll. All right, so RFX Frey says he has a question. Watched one of my previous videos, mentioned calculating weekly expected range and daily. Let me go over that again. All right, so I have this proprietary script that I got from somebody else, so I can't give this out, but it just marks these lines every week. They change every week. Mark the lower and upper expected move for the week. I like to see the history of that. That's why I'm using this script. So that's what I use for the weekly expected move. And then yesterday I just I went into edit properties here and changed this level to the level that was shown here for the lower, and same thing for the upper weekly expected move. Now for the daily expected move, I just get that from the options chain. So when this is for tomorrow right here. So at the close today, I will take the closing price and whatever this number is right here, and this will change a little bit. At the close, I'll take that number and add it and subtract it to the current closing price to get the lower and upper daily expected move. And for ES, you can do the same thing. I'm showing here for SPX, but it is exactly the same for SPX. All right, so Michael asks, can you tell me what H flow is referring to in Spotgamma notifications? So let me ask you, are you seeing that on your chart, on your Spotgamma? So I've had some discussion with Spotgamma about this, and my understanding last week that I was one of the beta testers. So anyway, I have not heard a detailed explanation. Okay, so Michael says he sees it on his end. I don't know, you may be a beta tester too. So let's go take a look and see what Michael is talking about. Let's go to the so these alerts over here. So this is something that Spotgamma has been working on, and I assume this H flow means hedging flow, green means that is a bullish signal. So let's see this QQQ H flow. There's a bearish signal at 153 and then a bullish signal at 222. So click on that, and it looks like this is acting like they were calling this a volatility alert a couple of weeks ago. So this is looks like what this is now. This comes out at 222, which is right here. So that's the latest alert. And that, again, that looks like a bullish signal. So Michael, that's my best explanation. I would assume that once these are available to all Spotgamma subscribers, that Brent will discuss them in more detail in a subscriber Q&A. All right, let's take a quick look at the live market. So for Nasdaq, sure. Right, I hope that helps. I hope I answered everyone's question. Truman, I'll do a little bit more research after the webinar about your question about where the volatility trigger is and why. I think the best thing, again, is to look at that combo chart if you want to get a sense of why it is at a certain level. But again, that's something that I don't have time to investigate in the morning, so I just take Spotgamma at their word. All right, let's take this. So Nasdaq Hero is turned bullish again. Price continues to grind higher. Same for the S&P 500, a very mechanical grind higher. Both supported by buy stop orders. Rising yellow line, buy stop orders. Same for Nasdaq, buy stop orders, and also CVD rising as price continues to slowly grind higher. All right, everyone, I want to thank you for watching. Thanks for your questions and comments, especially in YouTube. I appreciate all your questions, all your comments. I hope I answered your questions. Hope to see you tomorrow. And remember, tomorrow, retail sales at 8:30 a.m. Eastern Time could be a slight market mover. Anyway, again, my time is up. Thank you for watching. Thanks for your questions and comments. And I will see you tomorrow. Bye.